Hello and welcome. You're watching SBI Mutual Fund presents Invest Smart Mutual Fund ke Sath, partnered by ET Now. I'm Kavita Thapliyal, and today we are going to focus on legal practices. We are going to talk about lawyers and their financial life and their financial goals. So with me, I have in the studio Rajat Chattopadhyay, Executive VP, Zonal Head West at SBI Mutual Fund, Pankaj Matpal, Founder, Managing Director of Optima Money Managers. Welcome both of you, and welcome the audience who are lawyers, aspiring lawyers, and future great leaders of the country. So thank you so much for being a part of this discussion. Thank you. All right, so let's begin with understanding the financial life of a lawyer. Specifically, you've been with a lot of clients. You have clients, across sectors and spaces. I want to understand, how do you deal with the income irregularities? And because of that, the investment irregularities that lawyers would have. How do you deal with it?
Kavita, see, first thing, there may be some lawyers who are employed.
Okay.
So for them it's a fixed salary.
Okay.
And there are lawyers who are practicing.
Sure.
So if we focus on that segment, means lawyers who do not have even cash flow. So sometimes they get more, sometimes they get lesser income. So most important, first you have to see that what minimum you require every month. So that at least you plan for that. The month when you get more money does not mean that you spend the whole amount that month only.
Right.
Because you know in some months you may not have that much amount available with you. So once you write your household budget and you decide that minimum how much you require every month, so you can decide your cash flow accordingly. You save that much money at least for future months also. So that is very important for any profession who do not have a even cash flow.
Right.
So you decide that every month at least 25,000 or 50,000 how much you need. And if you're getting 1 lakh in 1 month, you have to keep 75,000 rupees aside, so that in the subsequent months, when you do not get that much money, you do not face any kind of problem.
So taking this conversation ahead now, how do you identify in a profession like this the kind of continuity that you need in your income streams, and how can you balance it out with the right kind of investments?
I think what is coming out from this discussion is that there is no fixed or regular kind of income from this profession actually. People who are working fine, I think they can always look at various investment options like SIP or do a lump sum investment. I think today money is, today if you look at, finally it's a hard-earned money. So first thing is that we need to ensure that the money is secure. Whether we invest in a debt fund or whether we invest in an equity fund, finally we need to look at what is our investment horizon. Sure. Even if people who have retired, and people always think that after 60 years, it is only for the next 2-3 years I need to plan. But actually, if you look at, even after 60 years, they need to plan for next 20-25 years. So point is that there should be some allocation which needs to be done in a debt, in a secured, could be a fixed deposit, could be a debt funds, and depending on the risk appetite, right? There should be certain buckets which should be created, which probably could go into maybe a hybrid scheme, which has a blend of a debt and equity, and maybe the money which is for say more than 10 years can be looked at investing into equity fund.
Equity fund.
Yeah.
Is that something similar you would want to recommend someone like an Arpit who's just starting out, and 5 years of more studies, that was you mentioned? Fifth year, okay. And right now you're living out of your pocket money, and how can he save and invest?
Exactly. Kavita, see, first thing here, if you see in the group, there are some experienced people who have that fixed income, and they may have already accumulated some wealth, but like he just mentioned, he's starting his career. Okay. So most important that you have to plan your life at any point of time. Like contingency planning is one thing, which is very, very important thing. Whatever you're earning, but you invest, you save, you spend, but you have to have some money if in emergency. Even then, even you mentioned that thing, that if something uncertainty is there, so how much money you have for that? Otherwise, what happens if you have money, for example, and you invested, and you are not able to withdraw that moment? Then what is the choice? Either you borrow money and you pay interest on that, it means you are helping somebody else to get richer, or otherwise, whatever you have saved for your long-term goals, you are spending that money. So in both the cases, it will become an obstacle in your wealth creation journey. So important is that you have to plan out accordingly your short-term goals, long-term goals, your health insurance, your contingency planning, your planning for different goals. So basically financial planning does not mean only investing.
Sure.
It is basically managing your cash flow today as well as planning for your future financial goals. So that is why you have to decide this, and based on that then what kind of assets, what schemes, what Rajat was mentioning just now, whether debt, equity or whatever it is. So that is the second part of that.
Anyone has a question on budgeting, or maybe how should your investment portfolio be divided into contingency fund and proper long-term, short-term investment? Anyone? Yeah, sure.
Hi, my name is Chelsea Das. I'm also probably much newer into the profession compared to a lot of the people sitting here. My question is, as a young lawyer and someone who's just started working maybe a year ago, how is it that we are supposed to, obviously right now we're not earning as much as we will be earning in 10 years. So is there some kind of percentage that we need to look at to invest, and does that percentage grow as we grow, or does it stay the same?
I think first thing is, I think what is important is that investment horizon is very important.
Okay.
The moment you decide in terms of that this is my surplus, I need to invest, one is that for what time period?
For what time period do you want to invest? Will you be taking money out of that investments, or you want to just keep investing?
No, I'm actually looking at investing for the long run. So.
Okay, fine. So which could be like 10 years or 15 years,
Correct,
or it could be more. Okay. So once that is decided,
Okay.
I think the best product or maybe an asset class which can be looked at is an equity.
Definitely.
And I'll tell you a reason why. Today when we look at, say, a stock market, okay, could be a mutual fund, could be a stock market, okay. So in last 40 years or 50 years, okay, one is that you would definitely look at expectation of a return. Okay. The second part which you would always look at, what is the risk in that? Okay. If your risk appetite is very clear that okay, I can take a moderate to aggressive kind of a risk, since you said that it is a 10-year kind of a tenure. Why I was quoting that example of 40 years or 50 years of stock market, the probability of a negative return. Okay. Now, for a single, there has been no instance where in 10 years you have got a negative return. Okay. So that's the reason I immediately said, some portion you can always allocate that which can run for 10-15 years.
Right.
But the moment you decide that okay, maybe not 10 years, but I'm okay with doing an SIP or investment of 5 years, then probably the probability of a negative return will be as high as maybe 5-6%. Okay. So if you're looking at long term and you need to create wealth, like what Mr. Pankaj was talking about, so that in that case, what you have a choice that should I go for a large cap fund, should I go for a mid cap fund, or should I go for a small cap fund? So since you are a fresher, you're starting your career at this moment, I think the best product to look at is that you should probably go for a large cap, rather than, because you don't have experience of maybe the volatility in the overall stock market. So that's why I think large cap would be a better choice in terms of looking at maybe an SIP or maybe a lump sum investment.
See, first thing is a very good thing that at the right time you're asking this question. It's a startup career and you can plan out. One thing is important about the professionals, that they do not have a fixed retirement age. Right?
Okay.
So because in employment 58 years or 60 years is the age for retirement, so you have to decide that by the time you should have that much wealth available with you for retirement. But for you, it may be earlier also, or you may work little longer also.
Is it a good thing? Obviously, it's a good thing.
It's a very
right?
good thing.
It's a very
There's a
good thing. You can keep earning and just
Right.
decide that.
So, but good thing is that because everyone knows that as early as possible, you have sufficient income so that after that you can live your life on your terms.
Sure.
Whether you want to work after that or do not want to work, right? So you would want to have a sufficient wealth at a certain age. Second thing right now, because you are starting your career or you are very young, first thing is health insurance. This is a very, very important thing. Before you start investing, buy health insurance for yourself. because I know you're not in employment, so for you, even that group insurance policy is not available. You have to buy a health insurance for yourself. In the absence of that, you can understand if you're saving money for something else, that may be spent for hospitalization if required, correct? That situation should not arise. You should have a health insurance with the adequate sum insured. Second thing is contingency. See, apart from that also there could be something urgent may come. So for such things, some amount, which ideally we say 3 to 6 months of your household expenses you should have. So as you mentioned, you know that how much you spend every month roughly. So accordingly, first you build that. For that, whether you have RD or you start making FDs or otherwise, in mutual fund there are some low risk schemes are available. For example, liquid fund or ultra short duration fund, short duration fund, this kind of debt oriented mutual fund schemes. So first build some corpus for that.
So you had some question.
My name is Advocate Praveen Singh. I came into this field just last year itself. Before that, I was into field of teaching. So I had my fixed income, and accordingly I had planned some investment. My SIP is already there, and I live in a joint family. So other members are also earning. So what we have done is jointly we have owned quite a number of property. But now when I'm coming to this field, what I've noticed is earlier I was having fixed income, but now my income is not fixed.
Correct.
On the contrary, if you will see whatever I was earning earlier, now it is much less.
Okay.
So my question was that SIP which I had planned, earlier it was big amount. So should I lesser the amount or should I do some, means what changes I can do?
Yeah. Usually expenses are according to income. So because your fixed income is already set, okay. So now when you have income, you have to decide how much you can save. If you feel that you are finding it difficult to save that much what you were doing earlier, so there is no problem. For some time, you can stop your SIPs because that can be started later also. As far as possible, you should try to continue.
Can they change the duration of the SIP instead of doing a monthly SIP, do a 6 monthly investment?
No, it will be better to do monthly only because after 6 months also he's not sure that which month he gets more money, less money.
But you analyzed, right, that your expenses can't be cut down. That's a fixed cost and
that is the most important thing. First you should try that also. If you can cut your expenses. So, but if that is not possible, so you know that what is minimum expenses and what you can save. So at least you should continue with that money, that if you are investing earlier 20,000 per month or 50,000 per month, whatever it is, and you want to make half of that, you do that, no problem. But whenever money, means you get more money, because as there is an uneven cash flow, in any month when you get more amount, that month you should top up in the same folios.
Right.
So it should be comfortable. There should not be stress on you because if you do not have fixed income and the fixed SIP is there, unnecessarily that will give you stress. So what you should do in that case, minimum how much you can save, you do that best possible way, and whenever you get more money that month, you should top up that.
All right, so on that note, let's take a quick break, but then financial planning for lawyers, more after this break. Welcome back. You're watching SBI Mutual Fund presents Invest Smart Mutual Fund ke Sath, partnered by ET Now. And let's dive in back into this discussion where we are talking about how can lawyers save, spend and invest their money. Any other question? Because okay, so.
Yeah, hi, this is Amit Gupta.
Hi.
I want to ask regarding index funds, whether index funds are better than large cap funds or large cap. Which one is better in between index fund and large cap funds?
Do you currently have a portfolio?
I have in large cap funds, but not in.
You already
not in
have
index
large cap funds.
Yeah.
Before you answer or I answer anybody, this is a very common actually confusion I'll say or misunderstanding. You ask the question the index or large cap.
Or large cap.
Yeah. This is not the right comparison because there are mid cap index, small cap index, micro cap index.
No.
So question should be whether large cap index fund or large cap actively managed
fund. Okay.
To be precise, Nifty 50 index fund
or
or
so that is large cap.
Large cap investment.
But then you already have large cap funds, active large cap funds in your portfolio. And
Yes.
all of them are large cap funds.
Are large cap.
Active funds.
Yes.
And you are not happy with the performance.
No, but risk to reward ratio is better, so I'm happy with the performance. But
And-
still, I want to switch some money to index funds. Whether it will be a good idea, a large cap index
Nifty
fund.
50 or Nifty
Nifty
100?
50 or
That's a
Nifty
very
100.
interesting question because all of them over
Yeah.
here are just asking about starting out and maybe saving that money to start investment, and he's already started his journey. So
Yeah.
you're an established lawyer in this profession since quite a long time then.
Yeah, but I'm a salaried person.
Okay, all right, which is why. Okay, Rajat?
Yeah.
So, if you look at, say, an index fund and a large cap fund,
fund.
active, okay. Basically, index funds are passive funds. So, what they do is they replicate the underlying assets in that basket, okay. So, if it's Nifty 50, the composition is 50 stocks. So it's replicating the index in terms of the overall. So whatever the fund or whatever the stock gives you return, less expenses you get a return. Okay. What happens in an active large cap fund? So here the fund manager has the flexibility in terms of deciding on the overall proportion of the stocks or the percentage of stocks he would like to hold. So it could exceed, it could go up and down in terms of his overall understanding. So what normally a fund manager does is that he will always try to beat the index. So the question that you asked is that whether an index fund is better or a large cap fund is better. If you're looking at a short-term horizon, say 1 year, 2 years, to an extent, maybe you would be happy with index fund. For a simple reason is because markets could be volatile, okay, and there could be chances that the large cap funds fall more than the index fund, because when equity market falls, both will fall, right? Only thing is that probably the index component will fall lesser than an active fund. But if you're looking at a time horizon of say 5 years, 10 years, 15 years, 20 years in a large cap, and again comparing an index and a large cap fund, I think large cap funds will outperform an index because the fund manager will always try to beat the index.
That's the whole purpose of active management. But then I understand from where you're coming, because Pankaj, a lot of viewers actually, and also the way we are seeing a lot of new AMCs specifically coming up with with passive large cap funds, and also the kind of valuations that we've seen earlier in the large cap space. Fund managers really found it very difficult to beat the benchmark as well. Although valuations look very comfortable right now, and we might see a change in performance as far as large cap active funds are concerned. But then people are really moving towards the index or the passive side when it comes to large cap.
Definitely.
So do you see this trend continuing? Okay, we get the part of index or the passive investment being very cost effective, okay, but what about the active or the fund manager strategies now?
See, I'll tell you, in large cap, there is no much choice with the fund manager.
Yeah, true.
Other than the weightage of the stocks, because they have to select out of 100 companies, means top companies by market capitalization, because as per SEBI definition for large cap, the top 100 companies, so you have to select stocks from there only. Okay, so it becomes difficult to beat the benchmark, to beat the index for the actively managed funds. So that is why we are seeing that usually, means in large cap space, that actively managed funds are unable to outperform their benchmark. So considering that fact, what you can do if you are investing in large cap, you can have one actively managed as well as one passive fund, one Nifty 50 or Nifty 100 fund. But if you ask me about the small cap or about mid cap, I'll say that there is a lot of space for, a lot of scope for actively managed fund to outperform benchmark. But your question is very specific to large cap. I'll say that here, if you invest only in index, large cap index fund, that is also fine. Or you can have two schemes, one that actively managed and one Nifty 50 or Nifty 100 index fund.
All right, so it's almost time to wrap up, but then I really want, you had a question, sure.
You have been talking about SIPs, mutual fund investments and all. Agreed. But what is my starting point? How do I select a fund? Because there are hundreds and hundreds of funds. If I'm going to invest my money in any fund, I need to know what the return it will give, how much it will give, and how are the fund managers are.
How you select now?
Right now, by gut feeling. That's it.
Gut feeling.
Hardly-
but for
hardly
that
anything
also you
because-
must be doing some kind
yeah,
of
because
homework,
somebody
right?
tells me this is good, I just invest a little bit. But my investment is a very
That's
low.
exactly what you're not supposed
We are
to
not
do.
supposed to. That's what I'm saying.
Exactly.
We need to understand, get educated on this.
Sure.
There should be some systematic way which you need to
There
guide
are,
us.
there are. Rajat, because he pointed the question to you first. I know Pankaj, yeah, this question is ideally for Pankaj, but then because he asked you.
So I'll tell you how I look at it. I look at, of course, there is no fund house which is bad, okay, and with due respect to all the fund houses, I look at who's the management behind it. So that's the first which I look at. Who's the management behind where I'm investing my personal money? Is it safe? Is it professionally managed? Is it going to deliver the kind of returns which I am going to which I have an expectation? So that's the first thing which I look at. The second thing which I look at is the professional management, the fund managers behind it. What is their track record? What kind of a performance they have delivered, if at all they are managing, say, XYZ fund, right? So that's the second thing which I look at. The third thing which I look at is that if I need any kind of a support, if I need any kind of a service, do I have enough network in terms of servicing my investors and distributors? That's the third thing which I look at. So broadly, if I can answer this, I think for me management is very important, because in the past we have seen there are a lot of probably problems or areas where things have gone wrong. So for me that is very important. That's my personal view. The second is who's managing that particular fund. I think that today, if you look at whichever fund it is, there are people who actually track the fund manager's performance.
Sure, yeah.
Right. Yeah. So looking at that, there are people who invest, based on whatever research they do. And by the way, today, I really envy the youngsters and who are so well aware in terms of, because everything is available in whether it is news channels like you guys, or whether it's newspapers, whether it is any kind of videos which are uploaded. So information is available. So much of information which is there, which was not there when we started our career, right? But that's an advantage you guys have actually. So broadly, I can say this, that look at that who is behind, because today you are giving your hard-earned money, right? So you have to look at who is the person or who is the company, who is the organization who is behind it. I think that can help you in terms of deciding.
All right. So plan, budget. I think that will be all on this session.
And asset allocation.
And asset allocation. So it's earn, invest, save, and then spend. Thank you so much for being a part of this. Thank you, Pankaj and Rajat. And that will be all. Thank you so much for watching. Goodbye.